Hey everyone, Assalamu alaikum. Welcome back to T Accounts. So the topic that we are doing today is discounts, and this topic is tested in both, that is O level, IGCSE as well as A level as well. So when we talk about discounts, there are basically two types of discounts in accounting. The first is trade discount and the second is cash discount, and in this video we'll be discussing trade discount only. So let's begin. Now, when we talk about trade discount, it is important to know that who offers a trade discount and why is that offered. So, it is given by the seller to the buyer. Why? To encourage bulk buying, right? For instance, let's understand this with an example. For instance, a buyer wants to buy a box, right? Let's say that he wants to buy 5 boxes and the cost of each box is $50. So, this is what he wants. But if the supplier says that if you purchase 3 more boxes, I will offer you 25% off. Why is he offering that? So that he can buy more, 3 boxes more. So that would be a total of 8 boxes. And if the buyer agrees, let's calculate that how much would he now be paying. So if he buys 8 boxes without the discount, the price is $50 per box, right? So that would be $400 that he would pay. But since he was offered a discount of 25%, so 25% of 400 would be a reduction of $100 from the price. So now he will be paying only $300. This is the post trade discount value, and this $100 is the trade discount that the seller offered the buyer because he wanted the buyer to buy in bulk. So this is given by the seller to the buyer to encourage bulk buying. And what is trade discount? It is just a reduction in the basic price, which is also called the retail price or the list price. The list price was 400. The original price of total 8 boxes, right? Per box $50. That is also called the retail price or the basic price, which is quoted for the first time from the seller to the buyer. But that after the discount he was only paying $300. So this is called the purchase value or the sales value, which we'll just see in a bit, right? So trade discount is a reduction in the retail, basic or list price. List price is the most popular term which is used in exams. Now, moving forward, what we also should know, which is the differentiating feature between trade discount and cash discount, is that for trade discount we don't make any double entry. We don't debit anything, we don't credit anything. This means that this $100 won't be recorded in any T account. This $100 won't be recorded in the T accounts, in the ledgers or in the day books, right? Trade discount is not recorded anywhere. It is not shown in any day book or any T account, not even in the statement of profit or loss as an expense. It is not shown anywhere. It is just shown at one place, which is on the invoice, which the seller prepares for the buyer, and that reduction, that subtraction as trade discount is just shown on the invoice. Why? Because it's just a way to calculate the sales or purchases value, which is also called the invoice price or a net price, which the buyer will be paying, the final price, right? Not the retail or the list or the basic price. So what we need to remember is trade discount is not recorded anywhere in the books, not in any T account, not in any day book, not even in statement of profit or loss. Moving forward, this is just a basic formula to calculate your invoice price, which is like, this is very much tested in P1, this topic of both O level and A level. So how do you calculate the invoice price, for which we will be making the double entry in the books, right? If we just look at that example again, we know that after the reduction, which is the trade discount, the buyer will only be paying $300. So the double entry will be made with this amount, not with 400. So this is called the invoice price or the net price or the purchases or sales value. And how is that calculated? By subtracting trade discount from the list price. That's what we did in the above example as well. So with invoice price, we make the double entry. We don't record trade discount. We don't record list price as well, because that is what not the buyer won't be paying that. Let's understand this through another example. It says Imad purchases the following items: 6 towels at 150 each, 9 bed sheets at 300 each, 8 carpets at 200 each. So he's buying more than one article. So let's assume that he is buying in bulk. Now let's calculate the total value of these purchases. So 6 into 150 would be $900. Then 9 into 300 would be $2,700, and lastly 8 into 200 is 1,600. The total of 5,200 of purchases. But these are the list prices. This is not the final price, because it further says he was given a 20% discount on these purchases. What type of discount is this? This is a trade discount which is given on the retail price. So now the question is, calculate the value of Emma's purchases. Right, so we can do that. Let's first, we have just calculated the total price. That is the total, you can say the total list price was 5,200, but he won't be paying that because he's getting a discount, which is the trade discount of 20%. So 5,200 into 20% is 1,040. This is what he won't be paying from the list price. What will he be paying? He'll be paying only $4,160. This is the invoice price or the net price which he'll be paying. Now if I have to make the double entry from, let's say, from Imad's perspective, because he is purchasing the goods, so how will he record this? He will be debiting his purchases with this value 4160, the post trade discount value, and he will be crediting his supplier from whom he is buying with 4160 as well. Right? So what we need to remember is, we don't record trade discount anywhere in the books. We record the invoice price, not the list price in the books. So this is all about trade discount. In the next video, we'll be covering about cash discount, and we'll also do a few past paper questions to get a grip on this topic, right? And if you haven't subscribed to the accounts yet, please do that.